Good day, grade 12 learners. Welcome to today's accounting lesson. My name is Sifiso Buthelezi. This lesson is brought to you by the Free State Department of Education in collaboration with Phakama Research and Development. Grade 12 learners, welcome to our critical lesson. My name is Buthelezi S. The topics for today, we are going to be looking at the financial statements as well as some parts of financial indicators. The subtopics for today, the focus will be on our statement of comprehensive income, statement of financial position, as well as the analysis and interpretation of financial statements. Now, grade 12s, we are going to look at the goals or the objectives of this lesson for today. First thing we need to know, since you are writing tomorrow your accounting paper 1, you need to understand the structure of your paper 1. Which topics are you expecting? How many questions are you expecting? How much marks are you going to be writing the paper for? Number 2, we are going to learn how to complete the statement of comprehensive income. We will be completing the statement of financial position. Later, we are going to be analyzing and interpreting the financial statements. So these are our 4 goals. Remember from our previous lesson, grade 12s, we have done the cash flow statement and we have also done the calculation of the financial indicators. Meaning at the end of today's lesson, we would have wrapped up our revision for paper 1. Because our paper 1 will be having the following topics. Topic number 1, we are going to be looking at the financial statements. Now, what is it when I say financial statement? What am I talking about? We are talking about the statement of comprehensive income. This is the topic you need to expect tomorrow when you are writing your paper 1. You need to expect, if you don't see your statement of comprehensive income, you are going to find the correction of net profit. So meaning, either you will see your statement of comprehensive income or your correction of net profit. Meaning, we are putting or here. Statement of comprehensive income or correction of net profit. And then again, we are going to see our statement of financial position, which will be accompanied with notes. Number 2, we should expect to see our cash flow statement accompanied with its own notes. We will also see our financial indicators calculations and then analysis of the cash flow statement, as well as other theory questions based on the cash flow statement. Number 3, that topic will be the analysis and interpretation of financial statement. Meaning, this is where we are going to be doing calculations, we are going to be analyzing, commenting, is where we write and explain in this topic. And then topic number 4, which is mostly theory question, we call it as corporate governance. Corporate governance, we are talking about the auditing part, the types of audit reports, the King Code reporting, the types of committees, all of those topics that you have done during the year. So these are the topics that we expect to see in our paper 1 tomorrow. And our paper is out of 150 marks. Now, based on the previous experiences, we have seen that in our question 1, we would normally see our statement of comprehensive income, our statement of financial position, as well as some notes, okay, for the 2 statements. Our question 2, from our previous question papers, NSC question papers, question 2, we always see our cash flow statement. It will either we are going to preparing the full cash flow statement or it will just be basic calculations on certain sections. For an example, saying calculate cash flows from investing activities, or only calculate tax paid and all of that. And then again now, still on question 2, we are going to see our calculations for financial indicators. Now, you need to know this, how to calculate these indicators from all these categories, meaning you must know how to calculate the profitability ratios of financial indicators, know how to calculate your liquidity financial indicators, and so on, the risk, the gearing, and all of those calculations. Meaning you must go to your formula sheet. You need to know how to identify the formula for the financial indicator you are requested to calculate or required to calculate. Right, and then moving to question 3 now, very critical. In our question 3, we will be seeing our analysis and interpretation of financial indicators. This may also include what we would normally call as the shareholding. Meaning there will be questions definitely on our shareholding. That's what we've been seeing. So you can expect calculations, expect also theory questions on shareholding as well as the other financial indicators. We are going to cover almost or most of the items under this topic. And then later on your question 4, which we normally see in our question would range between 10 marks and 15 marks, or 10 and 20 marks, depending on the paper or the examiner. You will see your corporate governance. Right, so this is the structure of your paper 1. We are fortunate in accounting, when we go and write, we know which topics we are writing about. Unlike with other subjects where sometimes you'll have to take a guesswork, here we are sure which topics we are going to see. So what we need to do is just to practice, practice, practice. Right, now let us move on. We are going to shoot straight to an activity because this is our final revision. We need to check whether we are ready for tomorrow. We are going to just do activities. Remember, we've been doing the theory, the structures, the way of calculation, and all of that. Right now, what we are doing in this lesson, it will just be practice, practice, practice. So this is what I expect you to do before you write tomorrow. Right, now what are we looking for here? We are going to do 3 activities. This is our first activity. This activity has been extracted from our National Senior Certificate Paper 1, Question 1. Right, now what are we looking at in this activity? Let us just read together here. This is company financial statements, Buhle Limited. The following information relates to the financial year ended 28 February 2023. The business sells bicycles. I would advise you, grade 12s, that whenever you're dealing with this question, you must always work smart. How do I work smart? If I see something important, I do what? I underline, I highlight. You are allowed to underline and highlight on your question paper. So you are going to highlight or underline what is important. What is the first thing that you should underline or highlight in your question? From question 1 to question 3. It is the financial year end. So I can write here on top that this is my year end. Very important. We are going to need this financial year end when we do certain calculations. You will see later on as we move with this. Now, what are we required to do here? There is 1.1. They are saying that we need to refer to information B. Please, when they say refer to information B, don't refer to information Z. You focus on what? Information B. That is where we should be referring to. So meaning our focus will be information B together with the trial balance. Information B, as well as the total of balances. Right, now here, what are we expected to do? We are expected to calculate the value. I'm underlining what is important again. I'm calculating the value of closing stock. Now, when I calculate value of closing stock, my paper 2 has taught me that when I'm calculating the value of closing stock, I use 3 valuation methods. Can you name them? 3 valuation methods. Can you name them? FIFO, some call it FIFO, weighted average, and then the third one will be the specific identification. What am I trying to say to you here, grade 12s? I am trying to say to you that tomorrow in your exam, please do expect that you'll be required to use the skills of calculating closing stock using the FIFO, using the weighted average, using the specific identification. It could be any of the 3, okay? Or it could be 2 out of the 3. Now, remember, this calculation of closing stock is part of paper 1, also part of paper 2. And then question number 2, 1.2, complete the statement of comprehensive income, meaning here we are not doing the full statement of comprehensive income. We are just doing certain parts. And then number 3, we are going to complete our statement of financial position. What is the year end? 28 February 2023. And then now they are giving us a special notes. Please do take care of this. Some figures are not given on your question paper, but are given on the answer book. Please be careful, meaning in your 10 minutes reading time, please look at the question paper and the answer book at the same time. Question paper, answer book, you look at them at the same time. Okay? Question paper, answer book. Question paper, if you are in question 1 on your question paper, you are in question 1 on your answer book. Right. And then now, figures are not required. This is very important. If you find a shaded area or a shaded space, please do not write in that space. If it's gray shaded, it means you do not write in that space. Okay? Already here they've told us that if it's shaded, do not even bother about those figures that must get in there. You just work with what is given to you where it's not shaded. Okay? Now, let us move on now. The other part now, this is our trial balance. We're not going to dwell much on it right now. This is just our trial balance with some question marks, as you can see. Next information, that is our information B. There's Roman figure 1 and Roman figure 2. We are going to break down this question into pieces so that we understand what we're supposed to be doing. Okay. There's Roman figure 3 up until the last Roman figure there, from commission to the text that is still old. So this is our information. And then we also have the dividends as well as the debt equity ratio. Once they give you a debt equity ratio, it means they are giving you to use it for a calculation somewhere in your statement of financial position. Okay? That is why they've given you this. It means this, we are going to use it in our statement of financial position to calculate certain figures. Okay? Now, let us go straight and answer the question now that we have seen our information now. Now, the first question, what are we doing here? We are calculating the value of a closing stock of bicycles using the FIFO method. That is for 6 marks. Now, which information do we need for this? You would need your stock purchase amounts, okay? So the table for the purchases for the year were as follows. We have purchases done in June 2022, the ones done in September, and the other ones done in January, okay? There is the number of units, the value per unit, as well as the total of value. Now, what you need to note, very important now, that how many do you have on hand? there were 1,009 bicycles on hand on the 28th of February 2023. 40 bicycles purchased in January. Now, this is very important. Let's start with the first point. 1,009 is on hand. Meaning, what is this? This is my number left. Okay? Now, second information, what does it say? 40 bicycles purchased in January 2023 were returned to the supplier due to the factory fault identified. Okay, now meaning our balance or the units for January, how many units do we have? We have 740. Now, they are not going to be 740 anymore. Why? Some of you got it correct, because 40 has been returned back. Meaning in this 740, we subtract 40, so meaning we are going to be left with 700. So 740 no longer exists. Okay. Now, the last one, a number of bicycles were stolen and must be recorded as a loss. Okay. Now, let us just check how we are supposed to be doing this. Okay. Now, on the first part, what is the first thing I do? Step number 1, you must always write how many are you left with, the number left. Okay. Now, because I'm using FIFO method or FIFO method, how do I do my calculation? I would always start with my last purchases, because what does FIFO say? It says that the stock that I buy last, I am going to sell last. Meaning, let me just repeat first. Stock that I bought last, I am going to sell it last, because first in, first out. The stock that I buy first, I sell it first. The stock that I buy last, I am going to sell it last. Okay? Meaning, when we have our stock here, June, September, and January, which stock that was bought last? It is the January stock, followed by the September one, and then June was bought first. Right. Now, how many units am I left with? I'm left with 1,009. When I start my calculation, I am always going to start from the bottom. So FIFO means bottom of my table. Okay, now I'm going to check how many units am I left with. Remember, we have all agreed that it is no longer 740, but it's 740 minus the 40 returns. And then from there, we are going to say, because the 700 was never sold, if there is 1,009 left. We would all agree there. 700 was never sold if there is 1,009 units left. Why am I saying so? Because it's based on a principle that says that whenever there is number left, it is left from your last purchases. Now, what is the cost price or value per unit of the 700 units for January 2023? That will be 2,100. Okay? If for interest sake, if I say 700 multiplied by 2,100, I get 147,000. Okay, this is what we get. Now, we are going to update the number left. Remember the number left, we used to say it's 1,009. Now that I've accounted for 700, what am I going to do now? I would say 1,009 minus my 700. Let's see how many units do we get here. Because I've accounted for the 700, so I'm left with now 309. Okay? Now, where is 309 going to be taken from? Because I've used all my last purchase now. I'm going a step up. Now, I'm going up a little bit. Now, it's 2,215. Now, I'm not going to need all the units. I'm only going to need what? 309 to make it 1009. Okay, now I will say 309 multiplied by what is the value per unit? It is 2020. Okay, there we have it. Now let's, for interest sake, let's see how much we get here. 309, 309. Let's calculate together. Multiply by 2020. Then here we get 624,180. Now we are going to add the 2. So it's 309 multiplied by 2020. Then we get 624,000. And then now, when we add the 2 items now, when we add the 2 items, we will get our 2 million. Let me just erase this one so that this becomes clear and neat. So here, we will say the January, which is 700 times by 2,100, plus the answer will get 309 multiplied by 2020, and then the value of our closing stock becomes how much? 2,094,180. Okay, so it's not necessary for you to show the totals per line. You can just have everything in brackets and then you come up with your total value. Okay, now that is what we're having here. So here, remember, it was 1,470,000. Here, it was 309 times 2020. It was 624,180. So now, if we say 1,470,000 plus 624,180, then we get 2,094,180. So meaning this amount of 2,094,180 becomes what? Our closing stock. Now, I'm going to ask you a question. We are doing financial statements now. Where do I record this 2,094,180? Where must I record it? Some of you got it right. I am going to record it in my statement of financial position. Okay, so this goes to my statement of financial position. So that is my closing stock. Now let us move on to the next one. Now I want us to look at the sales, cost of sales, gross profit. Let's address the trading section of our statement of comprehensive income. Now, remember, on the closing stock, we need to determine whether we're having a trading stock surplus or deficit. We are going to do that at a later stage, okay? Now, here, let us look at the question, the trial balance given to us. Remember, our year end is 28 February 2023. Okay? Now, we are given the sales amount of 21,017,200. Cost of sales, you are given a question mark, meaning it becomes our calculation. You'll have to do some calculations there. Now, let us look at the transaction given to us. The business uses a markup of 120% on cost of bicycles. Trade discounts totaling 336,000 have been granted and recorded. Okay, now these are our cost of transaction that will help us to calculate what? The cost of sales. Now remember what you've been taught in grade 9, from grade 9. You have been taught, of which I'm going to erase now, we have been taught that the cost price, which is our cost of sales, will always stay at 100. We have been taught that the markup percentage will be given. This time we are given it is 120. I need you to write this down. We are going to play a game with this one so that we are ready for tomorrow. And then we are also being taught from lower grades that the selling price will be now a combination of the cost and the markup. Meaning, in this case, in this activity, it is going to be 220. How did we get 220? It is 100 plus 120. Okay, there is the cost price plus the markup. Please write it down. We are going to need it just now. Now let us move on. Now let us look at how are we supposed to be recording this in our statement of comprehensive income. Please allow me to erase this. For our sales now, I'm doing my statement of comprehensive income. My sales is given 21,017,200. For cost of sales, how do I get cost of sales? They said that the trade discount has been granted and recorded. Now, what do you need to remember? The cost of sales is calculated on a pure amount of sales, meaning you need to first add back the trade discount. So you say 21,017,200 plus 336,000. Why are we adding back the trade discount? Because the cost of sales has nothing to do with the trade discount. Trade discount is what we as the company would be giving to the customers. Cost of sales are the cost we spend when we buy as a company. Okay, right. Now we add it back. Remember, when we add it back, you would get an amount of 21,353,200. Now, this is the sales amount without discount. Okay? Now, remember every time, creators, cost of sales is always calculated on an amount without discount. I hope you got that. Cost of sales is calculated on sales amount that has no discount, meaning the pure sales amount. Okay, now what did we do here? We said 21,017,000. Please calculate with me. 200 plus 336,000. We got an answer multiplied by, because I'm looking for the cost of sales. Cost of sales, remember we said it's going to be 100. Please do this on your paper. Sales is going to be 220. The gross profit is going to be 120. Okay, I hope you understand this part because we're gonna need this. Now we say multiply by 100, divide by our 220. Why divide by 220? Because you are given the sales amount. Remember, we are using the formula that says amount, which is the sales amount this time, multiplied by the cost price percentage divided by the selling price percentage. Okay, and then we get the 9,706,000. Okay, that becomes our cost of sales. The answer here becomes our cost of sales. Now, how do I get my gross profit? Very easy. I would say sales minus cost of sales. So it's sales minus cost of sales. 21,017,200. So we get 11,311,200. Please be careful because we'll be dealing with millions tomorrow. You'll be dealing with millions. Please always count your zeros. Remember, there are 6 zeros for a million, 5 zeros for 100,000. And then please remember those things. Those things, please remember them. Count your figures. Count your figures whenever you are writing in your answer script. Okay? Now, I want us now to look at different scenarios. Now that we got this, I want us now to look at different scenarios. Let's check what is being addressed here. If I were to get my cost of sales, and then I'm given my gross profit of 11 million, what do I do? Let us just look at this. You would say now 11,311,200 plus 336 and then multiply by 100 over 120 because now you are given the 120. Remember I said the gross profit is 120, cost of sales is 100, sales is 220. And then you get your cost of sales to be 9,706,000. Why am I telling you this? Because so that you are ready for tomorrow. Remember tomorrow, they can ask any of these. They can ask any of these and give you any of the amounts, okay? Now, for me to get my net sales, if the gross profit is the amount that is given to you, you would again take the 11,311,200, add back the trade discount of 336,000, multiply by, now I'm looking for 220, and then divide by 120. The answer you'll get, you subtract the trade discount, then you have your net sales of 21,017,200. Now, how do I get my net sales if the cost of sales is given? You take the cost of sales amount because that is what is given, multiply by, now I'm looking for net sales, which is 220, divide by 100. Answer I'm getting, I subtract. Meaning when I'm looking for my net sales, I would always subtract the trade discount because it says net. Net means minus. Now I get my 21,017,200. Now, how do I get my gross profit if my net sales was given? Then I would take my 21,017,200, first add my trade discount, multiply by 120 because I'm now looking for the gross, divide by 220 because that is what I'm given. The answer I will get, I will subtract 336,000. Then we get our 11,311,200. Now, these are some of the scenarios. And then the last one, to get my gross profit, if cost of sales is given, I will say 9,706,000 because now I'm looking for my gross profit. 120 will be on top and then divide by 100 minus 336,000. Then I will get my gross profit. Okay. Now, please don't forget to study these scenarios. Use different question papers for you to master these so that you are ready for the transaction. In the previous papers, we've always seen it that if the statement of comprehensive income, we see it as transaction number 1. Now let us move on. We are now going to look at another question, but for now, what I need us to do is just to look at the format of the statement of comprehensive income. We're just going to take 2 minutes for us to look at the statement of comprehensive income. You are going to write down the format before we get in there. You write down the format for 2 minutes. Welcome, Great Tops. I hope you have mastered your statement of comprehensive income. You have checked your format. Now, I want us to move to the next part now of our question. Remember, we're discussing their sales, cost of sales, gross profit, ways of calculating. Right, now, we are looking at the commission income and fee income as part of our question. Now we are given the trial balance here. The commission income is 277,000 in the trial balance. And then let's look at the question here. Commission for 41,000 is still owed to the business. So, meaning someone, a client is owing us 41,000 for commission. Okay. Now, let us see how this is supposed to be recorded in the statement of comprehensive income. You take the amount in the trial balance because someone is owing the business. Then you are going to do what? Add the 41,000. And then we get a total of 318,000. Now, remember, this is what we need to note now, that the 41,000 is an accrued income. If it's an accrued income, what does it mean? It means that you need to record it under your receivables. So please keep it safe. When we do our statement of financial position, we are going to add the 41,000 for our commission. Okay. Now let us look at the second transaction now. Fee income includes 47,150. This is the money for February as well as March 2023. Now, this is what happened. Please note that our fee income increased by 5% on the 1st of March 2023. In percentage, what does it tell us? It tells us that we have 100, which is the original percentage. We have the 5%, which is the increment percentage. And then we have the 105, which is what? What is the 105 now? Which will be the percentage inclusive of the increment. Okay? Now, let us now check. In February, there was no increase in February. So meaning in February, it is 100%. Okay? But in March, there was something now in March. In March, it was 105. Why am I saying it's 105? It was 100% plus the increase of 5%. Meaning altogether, we are looking at a percentage of 205. Now, this percentage has an amount of how much? 47,150. This is like the budgets. We do this in our budgets. We talk about this a lot when we do our budgets. Okay. Now, let us move on and see here how we are supposed to be doing this question. I'm just going to remove here so that it becomes clear. This is what I've already explained. 100 is an amount without an increase. 105 is an amount with an increase per month. And then now, what are we going to do in our calculation now? We say 47,150. Remember, this is the money for 2 months. These 2 months are not balanced. They are in balance now. One for 100%, one for 105. Now, what are we going to do? We say the percentage that we want, we are looking for the percentage of March. Remember, in March doesn't belong to the financial period. So we need to remove that. So we say 105, which is the percentage for March, divide by 205. And then we get 24,150. Alternatively, we can say 47,150 multiplied by 100. We can look for a full percentage all over 205. Let's see how much we get here. 47,150 multiplied by 100 divided by 205. We get 23,000. Now, from the 23,000, therefore, now we're going to do what you say, 47,150 minus 23,000. 47,150 minus 23,000, then we get this 24,150, which is similar to what we have done when we say 105 divided by 205 times by 47,150. Okay, now this amount, now I'm just going to erase here so that it becomes clear. This amount of 24,150 will be recorded like this now. On our statement of comprehensive income, we are going to subtract. Why are we subtracting? Because the amount is for March. Our year end is what? February. So our timeline, remember, March is outside. This is our March. So we subtract March because it doesn't belong to the financial period. Then we get an answer to be 278,850. Now, let us remember, what is 24,150? Where are we going to record it? We are going to record it as the income received in advance. Meaning, where do we record this? In our statement of financial position as what? As our payables, trade and other payables. Okay, it goes under current liabilities, trade and other payables, statement of financial position. Now let us move on. Now remember earlier on, you will remember this is the first calculation we started with. We got our new trading stock to be 2,094. When I check my trading stock surplus or deficit, now how much am I given in my trial balance? I'm given 2,125,380. And then in my transaction, what am I given? In my calculation, I'm given 2,094,180. Now, how do I determine surplus or deficit now? I will say trading stock balance in the trial balance compared to physically counted stock, meaning I would say 2,125,000 minus 2,094,180, I get 31,200. Then I call this as what? Trading stock deficit. Okay, now this becomes trading stock deficit. Why is it deficit? Because my trial balance is bigger than my transaction amount. This becomes what? A deficit. Now, if my trial balance was smaller than my transaction amount, this becomes my what? My surplus. Very important. Please remember this. Now, let us look at the next transaction. Now, this talks about the rent expense. It's a question mark in my trial balance. Now, what does it say here? Buhle Limited rents 150. Please underline what is important. Work smart tomorrow. And ensure that you underline what is important. Rents out 150 square meters of space from Prime Storage at a monthly amount of 330. I'm also underlining this. This is per square meter, okay? Meaning each and every square meter, we are paying 330, okay? Now, meaning for 150, we need to multiply by 330 to know how much we are paying for. Now, when did we start renting? Very important. I'm underlining what is important. We started paying from May 2022. When is my year end? 28 February 2023. Now, the question doesn't end there. There is more to this question. The company increased the space rented by 25 square meters on the 1st of November 2022. Rent was paid up until 30 April 2023. Okay, meaning we have extra square meters we are now paying for. Now let us see how we're supposed to be dealing with this. Now we are going to look at our payment before there was any increase. Now, which months am I looking for? Remember, starting from May up until October. Why October? Because an increment or an increase started from the 1st of November. So I'm counting. Let us count together. It will be May, June, July, August, September, October. So how many months are we having? We're having 6 months. We're paying for how much square meters? We're paying for 150 square meters. Okay? So we say 150 multiplied by 6. We will get 900 here. And then on this 900, meaning it's 900 square meters that we are going to be paying for the duration of May to October. And then we say multiply by 330. And then we get 297,000. Okay, there we have it. Now I'm moving to the other one now. I'm doing before increase and I'm doing after increase. After increase, how many months are we looking for? Remember, our focus is our financial period. They started taking this from May. Our financial period is 28 February. There was an increase somewhere here in the month of November. Now, from November to February, now let us count together. It's going to be November, December, January, February. Now, how many months now? We're having a total of 4 months. Now, but our square meters are not the same as the previous set of months. Remember, in the previous set of months, it was just without increase. Now we are on this one after increase. Remember, we increased our square meters by 25. Now we're saying 150 plus 25 multiplied by the 4 months multiplied by what? The rate, which is 330. And then we get 231. Now 297,000 plus 231,000. Then we would arrive at our answer, which we must record as our rent expense, since there was no rent recorded, as you can see. So we'll record it as it is, 528,000. Okay. Now we are going to look at the next part now. We can do our calculation like this. This is another way of doing it. We can look at the whole term from the day we started taking this, meaning from May to February. The whole term without increase, that will be 150, May, June, July, August, September, October, November, December, January, and February. That becomes 10 months, okay? 150 times 10 months, we get 330. And then this will give us 150 times 10, I beg your pardon, that would be 1,500. And then we say multiplied by 330, we get 495,000. That is the amount we spent only for the 150 square meters. Now we are looking at the extra square meters, which is the increase on our square meters, meaning there is 25. Now we are going to say multiply by 4 months because that is covering the month of what? November, December, January, and February. Times 330, we get 33,000. Now 495,000 plus 330 gives us 528,000. So there is our rent expense amount. Okay, now we're moving on. Let's look at our director's fees now. Let's look at our director's fees. We are given an amount of 1,610,000. What are they saying here on this transaction? Provide for the director's fees owed. The company's 2 directors, Brenda and Johan, have been employed since 2020. Now, this is where they differ. Brenda earns 10,000 per month more than Johan, but she has not been paid for February yet. This is our problem now. We didn't pay Brenda for February, meaning this creates what for the business? This creates an accrued expense. Okay, This creates an accrued expense, okay? Meaning when we do our statement of financial position, we are going to record this under the current liabilities, trade and other payables as accrued expense. Now, Johan took an unpaid leave. When someone takes an unpaid leave, it means that person will not be paid. We don't owe the person because the person took what? An unpaid leave for the last 3 months of the financial year. Okay? Now, this is where we are. Let us now check how we're supposed to be doing these calculations. We are first going to remove the 10,000 times the number of months. Why am I removing that? So that we can ensure that both Johan and Brenda earn the same, so that we can divide. Because Brenda and Johan are like this, so you can't divide. You need to make them to be equal so that you can divide. So what is the best thing to do? We are going to count the number of months. If Brenda has not been paid for February, meaning Brenda has been paid for March to January. Okay, now that makes 11 months. So 10 times 10,000 times 11 months, this gives us 110,000. Okay, now we are going to remove the 110,000 and we remain with 1,500,000. Brenda has been paid for 11 months. Johan has been paid for how many months? 9. How did I arrive at 9 months? Remember, Johan was supposed to be paid for 12 months, but he took 3 months unpaid leave. So Johan remains with 9. Okay? Now, when we say 11 months plus 9 months, it gives us 20 months. To get how much is being paid per month, we say 1,500,000 divided by 20 months, and then we get 75,000. So this is what each director was going to earn if there was no 10,000 extra for Brenda. So meaning Johan is earning 75,000 per month, but Brenda will earn 75,000 plus the extra 10,000 that we are told about. Okay. Now, how do we now go about recording this? Just look at this. We say director's fees amount, so it's going to be 1,610,000 as per the trial balance, plus 75,000 plus another 10,000. Why is this? Because remember, we said we owe Brenda for February. So we need to add accrued expense and accrued income, we add. Okay? So 75,000 for Brenda plus the 10,000 that we subtracted earlier on. Okay? So we get our answer for director's fees to be 1,695,000. Okay? These are the calculations. Remember, with the director's fees, it's all about adding the number of months and all of that. Okay? So this is the calculation for director's fees. I need us to go back a little bit to our rent expense. Remember, the amount for rent expense for 528,000. If there was an amount here on the rent, we were going to subtract or add something, then it was going to become our accrued expense or our prepaid expense. But here, remember, for our rent, we're going to attend to this later. Rent was paid up until 30 April, meaning there's a prepaid expense here. So when we do our statement of financial position, we are going to come back and attend to this. Okay. So with our director's fees, we are done. Now let us look at our full income statement. Sales minus cost of sales equals to our gross profit. We've already done this. Commission, we have already done this. Fee income, 303,000 minus 24,150. We got 278,850. We have done this. And then here it's shaded, meaning do not write. You don't write anything when it's shaded. Wherever it's shaded. Sundry income, also shaded. We don't write anything there. Operating expenses now, we are going to check how did we determine those. Let's just check now. For our operating expenses now, trading stock deficit, because we've realized the deficit, that is why we don't see it up there. We got our 31,200. Rent expense, we've already done it, is 528,000. Directors' fees, we've already done it. It's 1,695,000. Okay? Now, how do we get our operating expenses now? We are going to look at this at a later stage, but it's an easy calculation. It is going to be our operating profit, which is 4,150,300, and then minus our 12,254,100. It is just a bottom-up calculation. Okay, there we have it. 4,150,000. Remember, this is our operating profit, and then this is our gross income. Remember, when we say gross income, minus operating expenses, we get what? Operating profit. Meaning, when I say operating profit minus gross income, I will get my operating expenses. Just solving for X there. Okay, now let us look at our statement of financial position now. Statement of financial position, balances and totals from the records of on 28 February 2023. There is fixed deposit, 1,500,000. There is bank, which is favorable, 629. Now, here's our transaction now. I want us to record this transaction. The company has invested in we have three fixed deposits of equal value. One of the fixed deposits will mature on the 31st of May 2023. Okay? Now, how do we record this transaction now in our statement of financial position? Where are we going to record this? Where are we going to record this transaction? Let's look at that. First thing you need to do, you need to remember that our fixed deposit is 1,500,000, and there are three fixed deposits that are of equal value. So we divide by 3 to know how much each fixed deposit costs. Then we find each fixed deposit is costing 500,000 because they said one of them will mature. The reason why we're dividing is because we need to know what is the value of the fixed deposit that is maturing. Now, what do? We go to our statement of financial position now, which is previously called balance sheet. We say non-current current assets, and then we say financial assets, fixed deposit. We have our starting balance. Then we are going to remove the 500,000. Why are we removing it? Because it is no longer a non-current asset. It must be moved from the non-current. You record it as the current. So we remain with an actual amount of R1,000,000. Okay. Now, where are we taking the 500,000? It must go down now. It needs to go down. There we have it. Where is it going? Under current assets, cash and cash equivalents. You will obviously start with the cash and cash equivalents, which is the bank amount, petty cash amount, cash float amount, and so on. So we have our bank, and it's favorable. It won't always stay favorable. Sometimes it may be unfavorable. If it's unfavorable, it's an overdraft. Favorable, it's cash and cash equivalents. Okay, now, so we add the two amounts together, 629,000 plus 500,000, and then we get 1,129,000. Okay, now we're moving on. We now move to our inventories as we prepare our statement of financial position. Remember, we are now displaying this calculation for the third time. This is what we have done before, and then this is my trial balance. I want to do statement of financial position. Now, which amount am I going to record between the two? I will record the physically counted amount. The 2,125,000 is no longer valid. Now this is an amount that is now valid. 2,094,180. Okay, I hope everyone got this one right. Remember, every time for the inventories, you always record the trading stock coming from your transactions if there are no additional transactions given after that. Okay. Now let us look at our receivables. We are going to tackle our trading other receivables. This is our extract from the trial balance, debtors control, SARS, provisional tax payments, commission income, rent expense with that question mark. Remember, we have already displayed this commission 41,000 and this long calculation we have done for rent. Now let's see how are we supposed to record this. For rent, remember what's happening with our rent. We'll come to our commission just now. Our rent, remember, it was increased by 25 square meters from 1 November. Now, there are extra months that have been paid for. Which months are those? It has been paid up until April. So, meaning the year end is February. Year end is February, meaning there is now March and April. So this is 2 months now. There is the 2 months. So now we say 175, which is 150, which is the original square meters, plus 25 square meters. So this gives us 175 square meters. Then we multiply them by 2 because they are 2 months. We get 350. Then from there, we say 350 multiplied by 330. Where is 330 coming from? These are the amount that is paid monthly per square meter. Because some big companies, when they rent space, they rent per square meter, not per room like us as individuals. Okay? We rent per room. Big businesses would be renting per square meters at times. Okay? Per square meter. Okay? Now we get 115. Now 115 becomes our prepaid. How are we recording this now? Let's see, under current assets, trade and other receivables, we start with the balance from the trial balance. There we have it. And then we add to the 41,000. Remember, the 41,000 was talking about our commission income, meaning this is our accrued income. And then we have this 115,500, which is our prepaid expense. Now we have this as our prepaid expense, meaning this is an amount that we have for our receivables. Now let us move on and do the next part. Now this is the interesting transaction that we always see in our papers, national papers, provincial papers. Would always see something looking like this. It says here, a transfer a debtor's debit balance of 2,700 from the debtor's ledger to his account in the creditor's ledger. How do we do this? The quickest way is to open up the 2 tier accounts. The receivables tier account, which is the debtors, and the payables tier account, which is the creditors. Now, this is a debit balance. So the balance is here is 2,700. So you need to transfer it. Remember, if the balance is on the debit side, as they've said here, debit, next time they can say credit. So you put it on the credit side. So it means it's a plus. So if I transfer it, then I'm going to move it to the credit side. I'm going to move it to the credit side. So if I move it to the credit side, it means on my receivables, I'm going to subtract, meaning on this receivable trading debtors control amount or receivables amount, I am going to subtract 2,700. Coming to the payables, remember it's going to be a double entry now. It's going to be a double entry from the credit side to the debit side. So 2,700, remember payables is the liability, increases on the credit side. Meaning if I record on the debit side, it means I'm also subtracting on the payables. Meaning creditors control, we are going to subtract. Now let's see how this is recorded. Current assets, trade and other receivables, we are going to subtract 2,700. Remember the 41,000 and the 115,500 are coming from the previous one. Now the total of this becomes 636,910. Now with the SARS, we are going to talk about that at a later stage. SARS will not be a receivable, but it will be a payable. Let us find out why am I saying so. Now, let's see what this one says. It says we are given the creditors control amount, 523,890. SARS provisional payments, 1,049,000. Income tax, 1,150,000. And then transfer the balance of 2,700. We've already done that. And then this one says an amount of tax is still owed. Now, remember, let us see how this is supposed to be done now. Can you now take a minute? I'm just going to give you 2 minutes now to do the calculation here before I do it with you. What are you doing here? You are going to be recording the transaction in the statement of financial position. Just 2 minutes. Welcome back, grade 12s. We were doing the calculation for the two transactions. Let us see how this is supposed to be calculated. For trade and other payables, remember what we have done earlier on? We said that the 2,700 will be recorded on the debit side, which is a minus. Remember, payables is a liability. It's coming from my receivables. On the credit side, it was also a minus. Also here we subtract. So we are going to subtract 2,700 from my trade and other payables. And then the next one says an amount of for tax is still owed to SARS, meaning whatever that we have paid for, we still owe something. Now we have already paid for 1,049,000. The bill came to be 1,152,000. So we paid less than the amount on the bill. So meaning how much are we owing? It's 103,000. That is the difference. Now let us move on. Trade and other payables now. Still, there's another transaction here talking about dividends. There's interim dividends paid as well as the final dividends due. Which one goes to my statement of financial position now? Let us look at that. For my shareholders for dividends now, I will record what? The amount, final dividends due at the end of the year. The interim is not part of our shareholders for dividends here in the current liabilities. So there is the amount that we're supposed to record. Meaning if you are not given the final dividends, then we'll have to calculate them and then you record them as shareholders for dividends. So when we say shareholders for dividends, we mean final dividends. Okay. Now, let us move on to our next part of our question. Now we are looking at our full statement of financial position. Remember our fixed deposit, it was 1 million. There was 1,500,000 divided by 3. We got 500,000. We said 1 million. 1,500,000 minus 500,000. And then we got 1 million. Okay? And then that amount of 1,500,000 that was subtracted from the financial assets, non-current assets, was moved down to our cash and cash equivalents. Okay? Already done the cash and cash equivalents. Inventories, we have already done that. Receivables, we have already done our receivables. We have the 41,000, the 2,700, which is our transfer, the 115,500, which is coming from our rent calculation, and then we get our total to be 636,910. And then now we have our ordinary shareholders' equity, which is 22,562,750. And then for us to get the retained income now, we say 22,562,750 minus 20 million. And then we get 2,562,750. So that is how we get our retained income. Okay, then the last part, the non-current liabilities as well as the current liabilities. Non-current liabilities was just given on the question paper. You don't have to change that. You leave it as is. Right, and then current liabilities, we have already discussed the creditors control amount, the service fees or the fee income amount, which was 24,150. Remember, we've done the calculation. Directors' fees, remember, this was 75,000 plus 10,000 earlier on for Brenda and Johan. And then there's also this one for the transfer of balances of 2,700. Then we get 630. We've already done this calculation. Current portion is just given in your answer sheet. But remember with the current portion, it is coming from the loan. Okay? If there is a loan that will be paid in the next months, then it means you are going to do what? You are going to subtract it from the loan and add it there under the current portion. Okay. SARS income tax, we have already done this, 103,000. Shareholders for dividends already done. So our current liabilities, we arrive at 3,793,340. Okay. Now our total equity and liability is shaded, meaning do not write. So we don't write anything here because it's shaded. Okay. The instruction was clear at the beginning. Now, grade 12, I hope we are now having an idea on our statement of comprehensive income, our calculation of closing stock using FIFO, our statement of financial position. Now we are going to look at our analysis and interpretation of financial statements. We are going to look at our NST 2023 question 3. Now, let us look at the first part. We have Guidon Ltd as well as Navara Ltd. The information relates to two companies. We are comparing two companies. Remember, your question 3 tomorrow, you are going to comment comparing two companies or looking at one company, comparing 2 years, the performance in 2 years or more in that particular company. This is what we've been seeing in our previous NSC papers. Now, here we have our pointers which give us direction now. What are we talking about? Meaning everything we're talking about here will just be liquidity. What is another word for liquidity? Sometimes they will say comment on what? Working capital. Working capital, liquidity would mean the same thing when it comes to comments. Okay. What are the examples of liquidity financial indicators? There we have them. There we have them. Okay. Now, it says identify the company that is managing its working capital well. Code 2 financial indicators. Which company is managing its financial indicators well? Let us look at this. Here, the answer would be what? Guiden Limited. Why Guiden? Let us look at reasons why Guiden. Because Guiden, the current ratio for Guiden increased. Remember, we have a love arrow. It starts from this point to this point. Okay? Starts from the beginning till the end. Okay? So it's our love arrow. Okay? Now, so what are we doing here? We are checking, comparing Guiden as well as Navarra. For Guiden, it increased from 1,5 to 1,7 is to 1. Okay? From 1,5 is to 1 to 1,7 is to 1. While Navarra decreased from 2,5 is to 1 to 0,9. You see the current ratio of Navarra is going down, whereas of Guiden is going up. That is why we say Guiden is managing its working capital very well. Let's look at the asset test ratio for Guiden. So Guiden, what happened there? The asset test ratio also increased from 1,0 is to 1 to 1,2 is to 1. Can you see that I'm not writing a lot of English here? Please try to keep it short and very informative. Current ratio, a mark, increased from 1,1 is to 1 to 1,2 is to 1, a mark. You see here, you don't need to write a lot. This is an easy question. Your question 3 or your analysis and interpretation question is an easy question. You don't have to write a lot of English. If you're writing a lot, you must know you are not doing the right thing. So you must always keep it short. You see how many words am I having here? It's asset test ratio increase from, that is all, as well as 2. You don't have a lot of words, so it's easy for everyone to master. You just compare your 2 years. Now, debtors collection, which is also part of our liquidity ratios or working capital, decrease. Remember, we want to see our debtors collection going down every time. Okay? Debtors collection decreased from 22 days to 19 days, while our creditors payment increased from 48 to 50. Remember, our creditors payment period must be increased up until 90 days. We must always negotiate. We must always give ourselves more time to pay. And we must always collect quicker. Right. But when we look at Navarra, the debtors collection increased instead of decreasing. Remember, debtors collection, we want to see it going down. Creditors payment, we want to see it going up until 90 days because we want to have more time to pay our debt. But what is also important about debtors collection and creditors is that you must first collect, meaning your collection must be less, and then later pay, meaning your payment period must be more, okay, compared to your collection. And then we're moving on now. And then we're looking at Navarra. Navarra, as you can see, their payment period is going down. They were used to pay in 60 days. They are now paying in 55 days, whereas they are collecting later. It doesn't make a lot of sense. So they're just doing an opposite of what Guiden is doing. Now let us move on to the next question. Financing strategies as well as the gearing. Okay, meaning this is our risk as well as gearing. What were the causes of the change in the debt equity ratio provide two causes of this. This is the information given to us. Remember, debt equity ratio has to do with what? It has to do with two things. What are those two things? These are shares and loans. Okay? These are shares and loans, meaning it's loans versus shares. What happened here? What resulted to this now? We're seeing our loan, mortgage loan. Remember, we have our left arrow. Mortgage loan increased from 3,600,000 to 5 million. And then also our ordinary share capital increased from 12 million to 20,960,000. Same thing applies. Our shares issued also went up. So we issued more shares. Okay. Those are the causes. That is what I said when I said you are going to be interpreting the cash flow or the information given to you. Now let us look at this one. Financing strategies and gearing. For guidance, remember here they are being specific that we are commenting only looking at the figures of guidance. Explain why it was wise for the company to make more use of loans. Quote and explain one other financial indicator to support this opinion. Now, you are given the interest rates for 2 years, and then you are given these financial indicators. Now, they're saying, why was it a good idea to make use of more loans? Remember, once a question talks about loans, you must know we always quote what? We always quote ROTCE, which is the return on total capital employed. We would always quote our debt equity ratio. That is when a question talks about loans. Please refer to the lessons about the analysis and interpretation we have done before. Please refer back to them. You are going to learn more about this analysis and interpretation, because in that lesson we were saying a lot of things regarding the analysis and interpretation. Right, now let us look at this. The expected answer now. The answer will be ROTCE, because the question says, did the loans benefit us? Remember, the ROTCE, which is the return on total capital employed, looks at the fact that whether the loans that we borrowed, are they benefiting the company? Did we use them wisely or not? So here, as you can see, it has increased from 13.5%, as you can see here, to 16.6%. If this is increasing, it means the loans are benefiting the company. It was a wise decision. If they are decreasing, it means it was not a wise decision. Now, what is our comment? This is positively geared. Why is it positively geared? Because it is greater than the interest on loan of 14%. We are making 16%, 16.6%, and the loan is only 14%. So we gain about 2, something, so it's 14 minus 16.6. We are gaining about 2.6 basis points here. So that is what we are gaining from us selling, having these loans. Okay, so these loans are benefiting us. When do they benefit? If your ROTCE is bigger than your interest rate, then it benefits you. Okay, so that is our gearing. And then now, the next question now talks about explain whether the shareholders should be satisfied with the earnings and returns of the company. Now, this is the information. Let us look at our expected answer. Our EPS, remember when we talk about earnings, we are talking about earnings per share. There it is. Our EPS decreased. Remember, we're looking at Navara now. EPS decreased from 115 cents to 80 cents. Our ROCE, which is our return on total capital employed, that is our returns now, when they say comment on returns, decreased also from 11% to 6.4%. Now, shareholders should be concerned because they said we must explain. They shouldn't be satisfied because the ROCE is lower. Remember, our ROCE must be compared with the interest. The earnings are lower, the ROCE is also lower, which is our returns. It's lower than the interest on alternative investment, which is our fixed deposit. All right, now this is what I need you to do before you fall asleep. Before you sleep or before you enter your exam tomorrow morning, I need you to write down the format of the statement of comprehensive income, write down the format of the statement of financial position, write down the format of the cash flow statement. Once you are done doing that, I am going to add this one. Write down the notes of all the above. Of all the above statements, meaning the dividends paid, you must write how do you calculate dividends paid, how do you calculate tax paid, how do I calculate cash generated, how do I do note number 3, how do I do my receivables, my payables, all of those. Please ensure that you study these formats. So before you enter your exam, ensure that you are good with your formats, because if you are not good with your format, then you are 10 steps if you know your format, you are 10 steps ahead of everyone who doesn't know the format. Okay, so formats are very important. And then also, I need you to go and look at your formula sheet. From your formula sheet, remember last time we have played a game in our previous lesson where I gave you a formula sheet and then you had to state that this formula is for which financial indicator. This formula for which financial indicator. Please study that because the formula sheet will be provided, but you need to be able to identify whether it belongs to which financial indicator. Lastly, you need to know the categories. When I say liquidity, you must know which financial indicators under liquidity. When I say profitability, which financial indicators are under profitability. When I say solvency, which financial indicator. When I say risk, which is debt equity ratio. And then when I say gearing, which is return on total capital employed. When I say returns, which financial indicators do we have under that? Okay, so there is, remember, you have 4 questions tomorrow. You have your statement of comprehensive income or your correction of net profit. You have your statement of financial position. You have your notes. You have your cash flow statement, calculation of financial indicators, as well as theory questions on cash flow statement. You have your analysis and interpretation, as well as the shareholding. For shareholding, please refer back to the lessons that we have already had. You'll just go to YouTube and look for those lessons that we've already discussed about the shareholding percentage and the comments under that. And then question 4, we have already discussed it in our previous lessons, previous revision classes, where we looked at the corporate governance, the types of committees, the types of audit reports, the qualified, unqualified, as well as the disclaimer, the King Code reporting 2 and 3, the code of ethics, code of conduct, and all of that. So the ethical responsibilities, you look at that comprehensively. Okay, so please also use the previous question papers to prepare yourself. Use our lessons to prepare yourself. And then grade 12s, good luck for tomorrow. Please do not panic. Look at your time. Ensure that you use the time given to you. Use your 10 minutes reading time to look at the question paper, the answer book. Ensure that you ace this. We've come a long way. It's been 12 years, some of you 12 years plus with this education system. So please do your best to make yourself proud more than any of us. And then grade 12s, we have now come to the end of our lesson. Thank you for watching this lesson. See you next time.